So your question was how to make sure shot profits in trading. And I think the most certain way of profiting in trading is by buying new lows. And that's because the odds are most in your favor when you're buying new lows. And if you were to sell, you would want to sell new highs, or hopefully all-time highs if you can help it. But if you want to not be greedy, I wouldn't necessarily wait for all-time highs. But the newer the high, the fresher the high, the more you should be thinking about selling.
Okay, but you see, the thing is that we've already hit a bottom right now. How would you see? We've already touched that new low. So how would you make profit now that we are somewhere in the middle, or even if not in the middle, we are somewhere close to the bottom, but we're not. We've left the bottom. We've flown away from that.
I don't think where we are right now takes away from what I just said. I think I just need to specify a little bit better about lows and highs.
Okay.
So if you're trading on a smaller time frame, obviously you would be looking at less information. So if you're trading on a 30-minute time frame, you probably wouldn't even be looking back to April. You'd probably just be looking at this sideways range right here at best. And so new highs in this range are right here. And new lows in this range are right here. So with the logic I gave you, if you want to profit in this market, you need to be looking to buy more and more the lower it goes to new lows. And if you were holding, you would want to sell more and more the further it goes to new highs.
Okay.
I'm not saying that's the most profitable. I'm just saying that's the most certain way of profit. If you wanted to, if you wanted to trade today, you're not even going to get any fill on the 30-minute time frame unless we collapse or just like straight up moon. So you wouldn't even be able to do this on the 30-minute time frame. So we can go down to the 5-minute time frame, and the same thing applies. But now you have a whole new set of highs. You have these highs here, and their set of lows is a little different. So you have these highs here, and then your lows would be here. And you kind of have another set of lows right here. So you would be looking to sell at new highs, and you'd be looking to buy at new lows. And if you wanted to, trade on an even higher, shorter time frame, then these are the highs, and these are the lows. In which case, you would want to sell anything above these highs, and you want to buy anything above these or below these lows. Now, obviously, I wouldn't recommend that on the 1-minute time frame at this current pattern, because obviously this is a wedge and a bear flag, so you wouldn't necessarily want to buy the initial breakdown of this. So I would take this all as one pattern, and I would count new lows as right here. And so you can see that better on a slightly higher time frame. So this is all just one pattern, in my opinion. New lows start there. Or if you want to zoom out some more, new lows would be here. And that's against everything that your instincts would tell you. Your instincts would say, okay, well, if we can get above here, then let's start buying. Or maybe if we get above here, let's start buying. But that's the literal opposite of what's smartest. You don't want to buy after a rally. You want to buy after a dip. That's when your odds are in your favor of having the least risk and the most reward. Because if you're wrong, thinking this is going to bounce, you lose this because you stop loss out right there. But if you're wrong, thinking this is going to rally, and you buy in right here because you want it to go way up here, but you don't give up on it until it goes to new lows right here. You took all of that risk just to get to new highs up here. And that's what most people do. That's what moves the markets, is people get impatient and they for some reason they want to buy more the further away it goes from where they should buy. I don't know why, but that's just the way it is. And so typically they buy only after it's a bad idea, and they only sell after it's a bad idea to sell. It's really strange psychologically, but our breaking point is literally right where it should be a good opportunity for us. So wherever
Yeah,
everybody
man.
else is freaking the fuck out, that's where you should be buying.
So how do you make money every day, like intraday trading? What's your
This,
recipe? Buying low, selling high?
yeah,
But I mean, it doesn't go to new lows every day.
but on a different time frame it does. You just have to think on the fly.
Hmm?
You just have to think on the fly. I usually trade the 1 minute. I don't advise it. I don't even fucking teach it. That's how strict it is. But I trade the 1 minute. Like right now, we have a high chance of breaking out, low risk, high reward, because we can risk right there to make all the way to new local highs right way up here. So you could buy this with a stop loss right there. I'm not saying it'll happen. I'm just saying that this is a low risk, high reward setup that if I were further into this, if I were analyzing this closer, I would have more or less indication to want to take that trade. See how these
Okay.
all promptly rejected when they got to new highs, but
Yeah.
this one's not. It's just drifting.
Yeah, that's true.
Also, we went up on outsized volume compared to the range that we had before. So it's more conviction that, see, I would have been stopped up there. So by the time you could even follow my trade, I would have been out of it, and you would have been like, fuck, now I got to place a stop loss. I'm like, well, actually, you missed your chance to stop loss. Now you may as well hold and buy more down here.
Man, yeah, that's true. So how does volume help in this? Or volume doesn't help at all? You don't care about that.
No, volume's really important on every time frame. You want to look for outsized volume in the move that you trust. So if you want this to be a good move, then you want to see good volume behind it. And so we see good volume behind it. So I was going to trust that that can lead to a new value.
But there was a very the selling candles are very small. So does that not signify something bad?
Though that actually, the selling that came right after being small is actually a good sign. It means that there's more conviction buying and less conviction selling. So there's less confidence on the sell side.
Okay.
So like right now, this is another low risk, high reward setup. We're dancing off the old highs. We're already getting ascending wicks. You could buy here, risking this just to make here. That's a good risk reward.
Yeah.
I'm not saying I would trade it, but again, that's just, the patterns are all over. But again, you have to buy new lows to make to new highs. So you're buying the low to sell the high, but on a very tiny time frame. Again, I don't even teach the 1 minute time frame. So don't let this be a fair example, but it does show you really quickly where you can have opportunity to make money if you know what you're doing. Like
Okay,
even
I
if
got
I
you.
was giving you the trading information with my voice,
Mhm.
unless you were placing it with your voice, or you can do it with your eyes closed, like you can set up hotkeys on Binance, and you might be able to follow my orders faster that way. But you'll still have to do stop losses and all that. So unless you're market ordering with hotkeys back and forth, it's a recipe for disaster. If you're starting out, you should be on the 4 hour, 6 hour daily. The reason that's the best is because when you're learning those patterns, they won't fail you as often. So what you learn is actually worth learning. Versus if you try to learn on the super small time frame like intraday, half that stuff doesn't even hold true throughout the day. So you're studying stuff that's like white noise. You don't want to study what's not actually there.
I know what you mean. Yeah,
It's not
it's not
reliable.
reliable.
Yeah, so you can't study, oh, well, that's the reaction to this pattern. No, that's not the case. If on a high time frame, if you saw that pattern and you saw that reaction, then yeah, you can learn that as a probable reaction. But on the smaller time frame, you're basically just chasing your tail. You're not actually going to
Okay.
go further down, progressing as a trader.
Okay, so on the 4-hourly or the 6-hourly time frame, say now the 4-hourly will start, or like the 6-hourly will start in like around 4 hours from now. Okay, so how will you put the trade? You'll put the trade as the candle starts, or when you think it's hit the bottom, and how do you decide that it's hit the bottom?
You're asking where do I put the trade?
Yeah, like now you can open the 6-hourly candle chart. Okay, now looking at the future, say the present 6-hourly candle, it closes somewhere. So how do you decide where to start a trade, and why do you start there?
So you don't start at active price if you can help it, because that basically implies you did not think about it before you entered. You want to start at a price that it currently is not.
Okay.
You want the market to go through your orders.
Yeah.
So if you're asking about a specific candle, it doesn't really matter because you're not trading in this candle anyway.
Okay.
But I can still answer your question. So if you're trading on the 6-hour chart, then these are your lows right here.
Okay.
So you want to have your money reserved to buy more and more the lower it goes. However, on this chart, this is a bear flag. So you don't necessarily want to have optimism before you go to at least entirely new lows, which would be there. And even then, you would want to prepare to average in a significant amount because this is a bear flag. So you trend that, and then if you were to think that was a bear flag that was going to hold true, oh, it's a log, could fuck it up. If you want that bear flag to be true, you could be looking at buying down to 10K. So new lows are here, so you can buy some here, buy some there, buy some here. Well, this is how you're not going to get. You said how to for sure make profits and where to buy on the 6-hour time frame. So these are your buy opportunities on the 6-hour time frame. And now I can give you technical analysis reasons why these zones are good, but that's private information that I only teach to people that can afford. It's actually my pride and joy. But logically speaking, it does back up 100% with what I'm teaching you now. So it's as if you're learning the golden knowledge, but you're not.
I get what you mean. It's like the wisdom is there, the reasoning is not.
Exactly. There you go. There you go. Now this is all the information you need to make money. All the reasoning and rationale behind it is missing.
Okay. So, but necessarily it's not going to go all the way down there, right?
Exactly.
And how do you say it's a bear flag? Like, how do you print a bear flag?
Well, in that, if you want to know basic technical analysis patterns, you can go to babypips.com, or you can just Google technical analysis patterns and go to Google Images and see. There's a good one here. Or there's probably a better one. Say there's a falling wedge. It's basically what Bitcoin's doing right now. Or if you don't want to consider it falling, then it's in a rising wedge, but it's still in bearish band.
Okay. So you're basically bearish on Bitcoin.
Well, it's a move down, and then it's sustained sideways. And if you're sustaining a new move, then that's agreement of a new move. Agreement of a downswing is bearish.
Okay. So you wouldn't go long right now, would you?
No, I'm not long on Bitcoin right now, other than the orders that got filled at like 20, 30, 32.
Are you? What about altcoins? What do you feel about that?
Nope. just I'm eyeballing BNB as well. So here's a good example. So here's a bearish pennant. See, it's rising just like Bitcoin,
Yeah.
and then down it goes.
Yeah. I think we are also forming this bearish rising wedge.
Is that on here? About right.
Yeah.
But it has the most optimism for people because it's getting higher highs and higher lows.
Yeah.
And that's
Because
the
they'll
only,
think that we're going up. Yeah.
yeah, that's the only reason I'm watching it is because those fucking bots are making sure that we get higher highs and higher lows.
Correct. Correct.
In reality, I've seen Bitcoin do both. And so if it were a random stock, it'd be like, this is weak. But crypto is so speculative that one piece of good news or one new billionaire entering the market and that bear flag becomes fucking bottom.
That's very true, man. So do you track the news also at all points?
Do I track the news? Yeah.
Yeah.
And then I have a team of fundamental analysts that track the fundamentals on points.
Okay, they work for you or what?
We're partners. We're a team. I help them, they help me.
Okay, that way. Fair enough. That's pretty good.
So here's a bear flag on Bitcoin. So we had this giant bull flag and broke down, made a bear flag, and then still made the bottom of Bitcoin. Let me zoom in for you. Oh, sorry. Why is it? How do I? Right. So good. Can't even see it. So this is pretty similar. We got hedged forward. Everybody knew this was fart, and it got caught at a much higher low. But on the surface, all these idiots had their stop loss right there, and then we're short on Bitcoin, and then there's a bear flag, very similar to what we're in. New highs, new lows. Just looks like one big old bear flag. Breakdown. You see it?
Mm-hmm. Yeah, I see it.
And then that ended up being the historical. So this could be very similar. We have the stop loss that everybody had, or maybe that was the stop loss that everyone had. Either way, and then here we have that flag. That could end up being bottom. We could rally, still go to new lows, which is where I told you to buy, and then rally again.
That's why I haven't bought any of the gold signals right now because a lot of them reached there also, and I was there. But I mean, I don't see a re-rally from the gold signals because they've already been filled, so there's no point.
Yeah. We could even fake out a fucking yen, and that's why I said sideways at best. I think that's actually the most likely. It's engineering liquidity. It convinces people that they're bearish, convinces them to be bullish, convinces them to be bearish over and over again. And then we'll finally reject somewhere, maybe right there, and give that V bounce, and then really rally. Or, who knows? Maybe Monday morning it'll cheer up a lot faster. We could see something like this, one fake out, and then a rally, where we could see a fake out, rejection. Like whenever you see a new move happen, volatility increases. And so if you see shrinking candle size, that's reducing volatility, which indicates that soon a new move is coming. There's an indicator for that I rely on, the ADX trend strength. There's other ones too. It's right here. And so we had increasing volatility for this whole move, but that ended here. We've been retracing ever since. Depending on the time frame, that'll look more or less clear to you. See, we've been retracing since May 24th.
Yeah.
So in a bullish scenario, as we're reducing volatility, we'd be going up. So in this case, we're just going sideways. So we're reducing volatility in a downtrend. We're agreeing on this new price. It's super weak. I'm not saying that we can't be at new all-time highs very soon, but this price, that low, we're already at this local low. So the real money is going to be anything in this range. There might be enough money here to send us up to this area, but if it's not, we're going to have to dip into this area very easily. And it'll be great liquidity for everybody because nobody wanted to sell their Bitcoin up here. So everybody just wanted to buy it. So the market makers couldn't do much with that. But here, people are still bullish, people are still bearish. A lot of people are willing to buy and sell here. And then once they convince everyone that it's bearish, which will happen once this trend breaks and once that trend breaks, then everybody will be bearish and the market makers can say, oh, you want to sell your Bitcoin? Okay, yeah, I'll buy your Bitcoin. And then up it goes. But until the market makers can get what they want, they won't move the price in the favor of what they want. So if they bought down, if they bought it 8K, 10K, 7K, and they tried to distribute here, but enough new people entered the market, then this is the base of their distribution zone. But they were successfully distributing up here. So this is the top of the distribution zone. And therefore, this whole thing is one big distribution zone. And therefore, they are comfortable supporting the price here until they need to break it down. And they're comfortable resisting the price up here until they're ready to let it run. And so right now we're seeing proof that there are enough market makers trying to buy the low here. And if there ever at any point is not enough people willing to buy it, then it'll fall until enough people are willing to buy it, most likely the really rich people, because it's falling. Only wealthy people buy something that's on sale.
Yeah.
It's really strange how that works. They have the spare money. And so they can afford to buy something when it's cheap and wait, versus everyone else, they want to make money right away, and so they pump the price for us. But yeah, and so that's what we're looking at on the higher time frame. We have reduced volatility after down move, and so it's very likely to break down. If we can get some bullishness, it'll be great for altcoins and everything, but we're going to have to break above that little arc. And so we need to get above it and hold above it and then go to new highs. That's when I'll be really bullish, making signals on everything, and it'll be a nice gap. I thought it was going to be the past several days, and that's actually why my sleeping schedule is now fucked up. It's because I was ready for it. I was ready to be like, all right, time to start making calls. And I was going to call probably 20, 30 different things for you guys. And we would be longing stuff in this whole range, however long it takes us to get back up to this 50K range on Bitcoin.
But you were not sure it was going to happen.
Yeah, I'm not sure. So I was waiting. If I knew it was going to happen, I'd prepare all the calls. But I'm not going to do all the analysis and compare and contrast the different calls and find the best ones and give you guys the best ones just to find out that it doesn't fucking happen. And so I only made the calls on Bitcoin and Ethereum and BNB because those are the coins that matter. I don't have to do any extra analysis for those coins, so it's not wasted. And it's still not too late. And so my sleeping schedule is going to stay fucked up until Bitcoin decides what it wants to do. I'd say the chances of going down are over 90% at this point. Typically when stuff leaves the zone, it does it in 1 or 2 bounces. So that was its first chance. That was its second chance. It's still getting lower highs. At this point, it's not fooling anyone. It's going to come straight down to new lows. There's just not enough people willing to buy it, or it would have went up already.
So would you be longing it from the bottom or shorting it from the top?
That's a good question, and it depends on the time frame that you're looking at and how many candles you're looking at. A pro should look at the highest time frame first and then slowly move down. And so if you were looking at the monthly, this is what you see on the monthly. You see massive overextension, a bearish reversal that's confirming in less than 25 days. It doesn't look good. And I already know the volume is way down here. So all the conviction is down here now. So on the monthly, we're 25 days shy of confirming 100% bearish. On the 2-week, we are 1 day shy of continuation of 100% bearishness. So we actually confirmed bearishness 13 days ago.
Okay.
So on the weekly, we've been bearish confirmed since April 19th. It was actually printed at the end of April 19th, probably. Let's check.
So you basically would rather be short right now than long.
Well, I haven't finished saying what I was going to say. I'm trying to figure out the direction this is on the weekly first. So this is April 19th here. I don't know where the weekly. I think it was the 25th, wasn't it? 26th. So yeah, it switched to bearish on the weekly in this range. And so depending on where we are, right now we're here. So I'll just tell you about where we are now. So I just told you on the monthly, we're confirmed bearishness in 25 days. On the weekly, we've been bearish for a long time. I'd go to the 2-day here. On the 2-day, we're still in the zone that I told people to buy in. I'm not saying that it's a good time to buy anymore, but before this existed, I was telling people to buy in this range. I said down to 28K actually, which is right here. Hold on, I know I'm long-winded. I'm getting somewhere. Sorry. I know you're a little confused with where this is going still. And so we already know, based on the higher time frames, that we were bearish at the 2-week and below, monthly confirm soon. So here we are in the zone that I told people to buy in. So anyone that placed their orders ahead of time to buy more and more in this zone, their average price is here, and it's looking optimistic for them.
Yeah,
they won't even be at a loss until down here.
Yeah.
And so for them, I'm still bullish on continuation. However, if you were to buy this, which I showed to you on a slightly smaller time frame, if you were to want to buy this, you would want to stop loss at the new lows right there, because it could really break down to, it could go down to 28K afterwards. That's a massive gap. And so you would obviously sell here, but the odds are that you could buy here and then get shaken out here just for it to go up to new highs like tomorrow. And so that's a gamble, in my opinion. That's risking this much to make this much. So the good risk reward opportunity for this range has already passed. People already, they were the reason to stop falling. And they took profits here. They probably bought back again down here and took some profits here. And now they're all contemplating whether or not they should just bail. And the answer is they should just bail, but they're waiting for confirmation, and that's going to be new lows for them. That's what's going to confirm it in and pop off. And we're going to see what the bear flag's made out of. But so to recap, to just decide which direction to trade, because that was your question, is how do you know when to long or short, right?
Yeah.
Right. So a pro should go down to the highest time frame or up to the highest time frame and figure out the sentiment that correlates with, if you want to, I haven't figured out a simple way of saying this. I know there is, I'm just bad with words. You want to start with the highest time frame and scale down to smaller time frames until the sentiment changes. Okay, so you figure that out with me. Okay, So in 25 days, this is confirmed bearish. So right now it's neutral and very cautious. It could get bearish quickly. So on the monthly, it's neutral, and inside of a month, it could be confirmed 100% bearish. Okay. So on the 2 week, we have confirmed 100% bearish, and we still have much further to fall. Okay. So we'll assume that the higher time frame is also bearish for now, since this is the second highest time frame, and it's confirmed bearish and shows that it can fall further. Okay. So now we have bearish, and now let's check the weekly. The weekly says that we're in Beluga's buy zone and we could rally, but it's not looking too good yet. So again, still bearish, but not a good buy. I mean, maybe if you're averaging in from the bottom. But in my opinion, still more bearish than bullish. So now we're going to go down to the, I don't know, some people might do the 3-day. The 3-day says this is a high volume bear flag, high volatility is still increasing, very likely to keep going down. So I would stay bearish here too. Now, again, the people that bought where I told them to buy, they have a reason to be optimistic because they bought the low. But for you, you would be gambling if you bought this on this time frame. You're very likely to get shaken. So it's like over a 50% chance of getting shaken out. Because you can't be optimistic because you bought right here. So that would be a big loss just down to here. But anyway, moving on. So bearish as well. 2-day. We got some green candles on the 2-day, but it's reducing volume. And that second green candle that's not done printing for another second 10 hours, another 4 hours. But if it prints like this, that's going to be neutral. That's not very bullish in my opinion. It needed to get new highs and higher levels failed on this. So that's bearish. So right now, if you wanted to make a trade, you could do it on the 2-day or higher shorting. And so now let's check the 1-day. 1-day is the same thing. It says we're confirming a bearish reversal in 4 hours. So 4 hours, if we don't get better, even the daily is going to be confirmed bearish again. And it's in a bear flag with high volatility. So this is likely to go down. 12-hour, same concept, although it does look like we might be able to bottom around here, perhaps. Although I'm not going to anticipate it because it's not going to be new lows for it. And overall, this is a high volume bear flag still, reducing volume, lower highs. I'm still mainly bearish even on the 12-hour. The 6-hour still mainly bearish. The 4-hour still mainly bearish. In fact, the past half day has been increasingly bearish and down to volatility. Usually I go down to the 1 hour from here. So on the 1 hour, yeah, we could shake out some shorts here. We could, this might be a good buy. And then we could rally to here, or we could rally to there, we could rally to here, just to go down to new lows later. But yeah, I'd say, with my trained eyes, I don't see very much bullishness in this. I see the drops here that ended up being highs later. I see this consolidation that ended up being highs, the low of this consolidation ended up being highs later. These lows ended up being highs later. There's a lot of bearish divergence here. So I'm still very bearish even on this time frame. This is actually very rare of a circumstance where we have an alignment of sentiment on so many time frames. Typically, it diverges somewhere around the 4 hour, but we're already down to the 1 hour, still purely bearish. 30-minute, we are at new local lows on the 30-minute. See, those were lows. It went slightly lower, and now we went slightly lower. And so typically from those new lows, we could go to new highs. And so see, this went to a new low, and then we went halfway back up. And so now we're at a new low, we could go halfway back up. But in my opinion, that's not it, or in my perspective, that's not a good enough risk-reward ratio either. If you just stop lossing right there to make right there, oh, it's right at a good risk-reward ratio. So on this time frame, you could, if you had optimism and a reason to be optimistic, then you could long right here, stop lossing around 359, looking to take profits around 368.
Yeah.
I don't recommend it since on every other fucking time frame above a 30-minute it's bearish.
Yeah.
But so to finish answering your question, how do you know when to short or long? You go all the way up, find that sentiment, go down until the sentiment changes, and you can trade anything above that with that correlating sentiment. So in this case, I think anything above the 30-minute is purely bearish. And then some
Okay.
weird screwery and optimism starts to come out below the 30-minute time frame.
Okay, I get it. I get that. That's a good point. Yep.
And so that kind of answers your next question about, I don't remember what that question was anymore, but you can write it down in that list. How do you spot opportunities or something like that?
Yeah. So how do you hedge your risk? I remember that was also a question that we had discussed at one point.
So
Hedging risk.
I think hedging could be a subject all of its own. I think there's so many different ways to hedge in trading that I've barely scratched the surface of how to hedge risk. The only way I know how to comfortably hedge risk is by opening an opposing position. You can do that in hedging with Binance futures.
Opening a what position?
A hedged position, which is where you enter the opposing side. So like if you're long one Bitcoin, then you short one Bitcoin, and then it doesn't matter what happens with Bitcoin, because if it goes down, you make money. If it goes up, you make money.
Oh, I didn't get that. What do you mean? Like, but then how will you make profit? Because it'll just balance out with your long and short.
Yeah, that's what a hedge means. It's not intended to make money. It's intended to be safe.
Okay.
So what some people do is they'll enter a large position and hedge one direction. So if it goes in their favor, it's not canceled out. And if it doesn't go in their favor, then it is canceled out.
Okay, so they exit the other position in time to make profits on the other position.
Or they don't necessarily have, like for example, with options, you don't necessarily have to exercise the option. And so you can like sell insurance, which is basically a one-sided hedge. It works a lot better with stocks that have actual value, but with crypto, it's it's more speculative, so it's a lot harder to be able to hedge something confidently.
Okay.
But to finish answering your question, yes, it's canceled out. However, if you're averaging into the positions, then it doesn't matter. So if you're bullish on Bitcoin and it's going up, but you want to buy the lower it goes, you just sell slowly more the higher it goes.
I get it.
And that hedges against you not catching the long on the way up. But you have to have enough money to cover the DCA beyond any reasonable amount. Like for Bitcoin on a daily basis, it can drop 2K in a blink. So you would have to cover, several days worth of 2K. So, probably 2 weeks. So 2K, 7, so 14K. So you'd have to cover, if we're at 36K, you'd have to cover down to 22K. If you can cover down to 22K, then you could short, you can long Bitcoin from wherever. You just have to long down to 22K. And then you can handle 2 weeks of bearishness and still come out on that.
I get what you mean.
The same thing applies to Bitcoin. Since we haven't had a nice rally in Bitcoin, I would say the average size rally that we could see is closer to 10K. Okay. Because like the other day, didn't we see a 10K rally from my buy zone? I think it was just like 3 or 4 days ago. I think we rallied damn near 10K, wasn't it? We went from, where was it?
35 to 39.
This isn't showing it. Oh, this is the 30-minute time frame. That's why I was confused. Yeah, right here. We went from 35. No, that's not it. Where was the buy? Oh, it was right here. 33 to 38. It was damn near 10K. When it was just a short scalp. I wasn't sure how long it would last. But yeah, again, also here was another 10K. So yeah, we're getting 10K rallies from here to there, a little bit less than 10K. And so you would want to anticipate, typically we don't just have solid bullishness when you have this much bearishness. It's not going to just all of a sudden blaze everyone's faces off and do that. But you would probably want at least a week's worth. So, 10K per day. So 50K, we're at 36. You would want to be able to short till 80K at least.
Yeah, I mean, like,
if you can afford that, then yeah, you can short the higher it goes. Every time we go to new highs, buy, just sell more. So sell some there, sell some at that level, sell some at this level, sell some at that level, sell some there. Here, just sell more the higher it goes. And eventually, even though you didn't catch the long because you couldn't buy low, it'll fall and you'll make so much money on that drop just down to the old highs that that'll be as if you caught this down here and rode it up to there because the size difference, you would have been heavily averaged in by the time it happens.
That's true. That's true.
So the deeper you are, the less move you need to compensate from catching the rest of the move. That kind of answers another question of yours. I forget what it was, but something about consistently big.
Yeah. So if you had a portfolio, okay, right now, what would you do with it? Like if you had a portfolio like mine, say you had like $1,700, how would you multiply it? How would you have to sell?
Well, right now it's pretty straightforward. Just watch Bitcoin and BNB and Ether like a hawk. But again, at this point, we're waiting for a breakout and a retest. So at the breakout, you want to like miss sleep. And then at the retest, you want to like miss work. So like that could happen. And then that's where all the real money goes in and we haul ass.
Okay. So basically at the breakout, you want to watch the breakout of Bitcoin or Ethereum or BNB.
Here, I'll make this simple for us. I'm gonna draw this line and I'm gonna set an alert for it. There. It'll hit our chat when that happens. And so when that alert goes off, then you want to be looking alive. Until then, we're probably going to go lower. We're probably going to.
Okay.
We'll probably at least go down to 32.7. I had to guess. I'm not saying it has to happen today. Like we already went to new lows for the day right there, so we could go all the way up just to come all the way back down tomorrow.
Yeah. So basically, if it rallies, don't get too confident.
Yep. Once we hit that line, that's when we'll pay attention. Is that what you asked? What did you ask?
What? Pardon?
I was asking, what did you ask?
I asked, like, if you had a portfolio of $1,700-$1,800 right now, how would you multiply it?
I would just pay attention to that trend line that I gave you.
Okay.
Did I just
and you would wait for the trade. You made an alert right now. Yeah, you did.
Yeah, but the alert, it's not showing up because I deleted the trend line. Oh well, I'll make another one. It's fine.
So you would wait for the trade basically. You wouldn't trade otherwise. Like you wouldn't make another loss or anything. You would just trade when it's short, and you wouldn't trade otherwise. You just sit and watch.
Yeah, unless there's a short opportunity, you wouldn't want to trade right now.
Okay, I get it. Like, it's better to trade less than to trade more. But
yeah, well, it's not so much about trading less as it is about position sizing. And so right now you would be looking to use less than 1% of your size, which if you have $1,700 isn't much money at all. It's just $17. That's less than $17. Yeah. So if you want to take out all but $1,700 and go to high leverage, you could put it in from 21K. Let's see, how much is that? 17 times 1.5. You could have $2,100. So on the first order, you'd be looking to put about $1,000 on. So you'd put $1,000 on 2,200, and then $500 on, I don't know, maybe, I don't know, 2,500, and then 1,500. So this would be 250. This would be 125. That would be 60. That would be 30. And then just hope that it falls into your orders. Otherwise, you're going to have to wait for a new trend, which, I mean, it's going to be a while. I mean, honestly, even when the price goes down to new lows, goes up to new highs, passes the test, this is still going to be bearish on every time frame other than the 4-hour and below.
Okay.
So it's going to be, well, actually, it could potentially have a bullish. I don't know what it would look like on the daily when that happens. If that happens, it'll give some optimism on the daily, but it's not going to look very convincing.
Okay.
So the good choice is to buy the new lows, which is why you're going to take your money and put it there. Otherwise, you're waiting for that alert to go off from the chat so you can start averaging into the dip of the breakout.
All right, I got it.
Now,
yeah.
On a normal day-to-day basis, if Bitcoin weren't doing this, and we were in any of these days, then I wouldn't be talking about Bitcoin. All right, excluding some of these days. Excluding this to here, excluding those days, you had all of this to be bullish on altcoins.
Yeah.
And so I would be telling you about different altcoins to buy if it were any of these days. But here, if Bitcoin takes a shit, it's going to ruin altcoins too.
For sure.
Altcoins don't get ruined when Bitcoin just does these small little dips. That just gives good entries to the altcoins. But when Bitcoin's in a massive bear flag, if that bear flag plays out, that'll slaughter altcoins, and a lot of them have 50% gaps down to make. So I wouldn't even try to long an altcoin. So we're looking for short opportunities today. Otherwise, we're looking to long the fall of Bitcoin when it happens. And then if you want to overtrade, you could look at altcoins and see. Okay, so looks like I'm gonna do this on this different time frame. It looks like looks like 10 hours ago there was probably some decent short opportunities. Nothing epic, nothing great, but there might have been a decent opportunity to short some altcoins 10 hours ago when they're at that lower high. But other than that, it's not a good opportunity to short alts right here either. We're already at the old lows. Well, chances are we'll just go to new lows, and then we can go all the way back up to new highs, just like I was telling you with Bitcoin.
Yeah.
So we wouldn't want to short here, risking that. To make that's just a gamble. And so that's what professional trading is you're looking at patterns, you're identifying setups, and then you're calculating the risk reward ratio of those setups, and then you're comparing those risk reward ratios to other setups to identify the best risk reward ratio setup.
I get what you mean. Don't trade like a lunatic, basically.
Yeah, you have to have a reason to trade. And not only that, but it should be the best reason you have out of all the potential trades. Most people, they're like, oh, I found a trade that's worth trading, and then they trade it. The professionals will look at everything, find out what's most worth trading, and then trade that.
Yeah.
It's very interesting. We have hundreds to choose from. If you count stocks, we have thousands of high volume stuff to choose from. There's no reason to, oh, let's wait for this to do something. The only exception is Bitcoin. since whatever Bitcoin does, it's going to influence the market.
Yeah, Bitcoin is like it is the first mover in this market. Like whatever Bitcoin does is what other people amplify and do.
Yeah, so we do have to pay extra attention to Bitcoin, but other than that, there's no reason to favor any one coin. We should just look for the best setup.
Yeah.
All right, so I think that was question number 3, but so question number 2 was, how do you know? Okay, so question number 1 was, fuck, what were the questions? Let's see if I can.
So they were, how do you make short profits in trading? How do you hedge risk to absolute lowest? We got that.
Recap for a second.
What to do? Yeah. So the third was what to do when market is moving slowly and choppy, which you said like just chill the fuck out, don't do anything.
I can see the list. So on number 1, how do you make sure shot profits in trading? What's the answer that I taught you?
Well, buy the fucking lows and buy lower than the fucking lows that were previously set, and long the motherfucker out of that. Like go lower and lower and lower. If it bounces from there, you make profit.
So where would you sell though, for sure? Like where's the most profitable way? Not the most profitable, but the most certainly profitable way of selling. Where do you sell?
Where do you sell? When the trend breaks.
When the trend breaks, or at least at.
I mean, when you're happy, you just take profit. You know what I mean? Like if you haven't made profit in a while.
No. So the logic is you buy more the lower it goes, and you sell more the higher it goes. So
yeah,
you would take profits at new highs. That was the answer I was looking for.
No, naturally you'll take profit at new highs, for sure.
Yes.
But it also, if a trend breaks, like say it's gone to a high and now it's coming down, it kind of breaks that trend that it was following before.
Exactly.
So then naturally, then you go and sell 50% because you're not sure whether it's going to bounce back again, go up again, or where the hell is it going.
Yeah, exactly.
So yeah, sell maximum at new highs naturally. Nobody wants to sell at a discount.
So you can be optimistic before it goes to new highs, and then once it goes to new highs, then draw a trend line and start exiting.
Yeah, start exiting for sure.
And the same thing applies
I think
to
like
lows.
what I also, yeah.
Optimistic at lows, and then once it leaves the low, then you draw a trend line, and once it breaks that, you stop buying.
For sure. And you have to trade less. I feel, don't trade more, because I think the mistake I make is trade more. Like I'm not being certain about anything by trading more. You know what I mean? Like I'm just gambling.
Yeah, even
I'm not trading.
Those fees don't seem like a lot, but they add up if you're trading with 2,000 at leverage.
Yeah, like honestly, trading anything at leverage, then I mean, like after a point, if you lose too much, then you feel like you want to make it all back in one go. I think that's a criminal sin.
Right? Everybody thinks that.
Yeah.
That's I read that somewhere, that everybody thinks the trade that's going to change it all is one trade away. But it's funny because it's your behavioral pattern that's going to change it all. And that's not one trade. That's every fucking trade.
Very true, man. I face this, dude. Like, no cap. It's true, dude. Like, I've from this conversation, my major takeaway is trade less and don't trade too much. Do not overtrade. Overtrading is a big mistake, I feel, that a lot of people make.
In a lot of professions, the more you work, the more you make. And while that applies in a lot of ways to trading, it doesn't apply directly to trading. The more you trade, the less you make. It's the opposite. The more you analyze, the more you think, the more you can make. But directly, the more you trade, you're not going to make.
Yeah.
And then you asked, how do you hedge risk to the absolute lowest? And what was my answer to that?
Your answer to that was about the futures thing. Like you can buy lower, and you keep buying higher amounts of the same.
Yeah, and then you have no risk because you're averaging in.
And then you have no risk because you average in so deep that in case it bounces from any level, you're going to be winning.
However, potentially, shorting, you can't have the lowest risk. I mean, you can look at GameStop, for example. You heard about that?
Yeah, I've heard about that.
So they were shorting, they're trying to
Yeah.
tolerate the risk and they keep getting squeezed. It's the same concept. So theoretically, you can't ensure the same amount of minimal risk that you can with a long. So shorting, there is a little bit more risk. But yeah, you're right. Other than that, you just average in deeper. You can't lose.
I think in today's market, if you short from higher highs, you still have a chance because it's bearish. Like somebody or the other will lose confidence, and a lot of people will lose confidence, and they won't long it anymore. In today's market, like if tomorrow you're shorting from higher highs, you still have a higher chance.
Yeah.
But in a bull market, if you try to short thinking that, like if there's no resistance above, and you think, okay, I'll short from here, creating your own imaginary resistance. I mean, like, because the sentiment of bullishness is such a road, I don't think you can survive that. So that GameStop episode was exactly that, I feel.
And then the other way to
It just
hedge is with, hedge mode, and you enter in a pleasant position.
Yeah.
And that's where you long and short at the same time.
Yeah, but that's something I think I need to do a little bit more research on, because I didn't clearly get that one, like exactly what.
It's not really for beginners. That's why it's disabled by default on Binance. And so number 3 is what to do when a market is moving slowly and choppy. And the answer to number 2 is basically the answer to number 3. You want to buy more the lower it goes. So actually, this is the answer to number 1 too. Number 1, 2, and 3 all have basically the same answer. You want to buy more the lower it goes and sell more the higher it goes. And
for
then
sure.
number 4, how to maximize gains when trading. I don't think you asked me that yet.
I got it.
With maximizing gains, that's an art form, and I think that's something that I and anyone else can only hope to continue to perfect the rest of our life.
Okay.
It's something that I can help you with, and other people can help you with, and everybody has their own edges. That's what it's called in trading, is an edge. And most people are very secretive with their edges because it's how they make their money. It's what they work the hardest to find. And typically when they give away their edge, it reduces the strength of their edge because it can be counter traded or whatever.
Yeah.
Or not even counter traded. It could be outbid. Like with my edge, when I share it with people, it decreases the strength. That's the number one reason I charge people. Because we can't all buy in the same spot. There's not enough. Like with Bitcoin and Ethereum and BNB, yeah, we actually can probably make a little bit of coordination. But once I have a couple multimillionaire friends, we probably can't even do that. So I don't know. I already have multiple people that are managing over $1 million. So at this point, I can already assume that I'm influencing the market with where I tell people to buy. And so at that point, I can deduce that I should probably value what I'm telling people, because people are taking money away from my income.
Yeah.
It's officially to the point where, okay, now I'm getting less fills because I'm teaching people where I buy.
Yeah, man.
So to maximize gains when trading, that's just something that you're going to have to keep your eyes open and keep your mind open to new ideas and new edges. What I did for the majority of my edge before I learned my most prized edge is I combined indicators. I looked at all the indicators and I was backtesting them, and I had like 15 different indicators, and I checked them all before I made a trade sometimes, and that's how I got all of my odds. They're odd enhancers, basically. It's where you're calculating the odds of something happen, and the more you see indicators lining up with that view of what could happen, it's kind of enhancing the odds of that. And so the more odd enhancers you find and add to your tool belt, as I say, the more you can maximize the gain. So the more reasons you have to hold along or close along, the more you can maximize your gains trading.
Okay, I get it. So I think that's a good enough conversation for today. Because
Oh,
before I get sleepy, I don't want to ask the other questions because then, like I won't have them in my head by the morning. So,
well,
um,
well, the first four were, or the first three were all the same answer. So really,
yeah,
we've
but
only
they
have
got
only answered two.
perfected. But at least they got perfected, that I at least have a vision for the next couple of days. I won't trade like a jerk. I won't trade at all actually, dude. I'll just fucking wait it out, man. Because
All
the
right,
next time I trade, I want to make a good profit still.
all right, cool.
I don't want to just trade on like $2 and $4. The next time I trade, I'll either wait for it for the retest, for that long, or for the short, and then
Okay,
long it from the bottom.
all
What do
right,
you say?
sounds good to me.